But as an investor, everything is investable. I'm just not going to have any taboo. I can invest in weapons, so defense stocks. I can invest in cigarettes. I'm against, cigarettes. I don't drink. I don't like weapons. But this is me in my private life. And this is where you see that diversification has weakness, because today almost everything is correlated. So I am not going to seek diversification for the sole purpose of it. This is my main philosophy. Everything is investable.
As the market tumbles and bounces again, we are looking for deals. The Market Bus members are looking to make some money, because the money is made when markets are red. You gotta plant the seed while everything is destroyed in order to grow stronger. Investment markets are giving weird signals, and we're gonna know what Akim one-on-one thinks about the market. So first things first, Akim, tell me about you and your investment. Like, how do you invest? What should people be looking at you for?
Yeah, so I mean, it depends on the people. So you need to think, why are you investing? Are you trading? You just want to have emotions, If that's the reason, where you don't have a particular material goal, where you want to have emotions and share experience with people, then you can buy whatever you want. You can buy Trump coin, you can trade. So it really depends on your goal. If you need money for a mortgage that you absolutely want to have this year, look, I can only recommend you to keep it in cash.
Or buy treasuries, which is as good as cash. Treasury, 1 or 2 months.
Short-term treasuries, or just keep the cash on
Savings
eToro.
account.
eToro pays you at, I don't know, 3%. It depends on.
Depends on how much money you have in there. But a high yield savings account sometimes is good.
A high yield savings account. So it depends on your goal. In my case, my goal is long term, and when I speak long term, it's really long term. It's even after I die. That's how long term it is. Most people who invest long term, they want to invest until they, I don't know, maybe 60 years old, right? Just to be sure,
retire,
to have a retirement. In Europe, we have the state pensions, but there's a demographic imbalance. You don't have a lot of young people, and you're gonna have less and less young people compared to old people by the time you retire. So there is actually a real risk that state pensions could be cut, or the risk is always there, right? That the state fails, or the public pension
policy
fails.
of the state, as other people call it.
Yeah, so some see it this way, and the best you can do is just to not rely on one single source of income that is hypothetical, that is 40 years down the line. So me living in Europe, I'm supposed to receive a pension when I'm, I don't know, 65, and to receive it in euro. And I like eToro because I can invest in dollars, right? So there I mitigate the currency risk, but also I prepare a retirement plan for me. But anyway, I'm hoping this money that I won't have to use it while I'm alive. I have, I'm thinking already about the next generation, and I want to pass this wealth to keep it in the family, a portion of it to give it to charity before I die. When I retire, once I'm sure I have a retirement, I give a good portion to it for philanthropic cause. Anyway, the point is very long term.
You're talking long term. So you're talking about so this is a generational wealth portfolio, right? So you're looking to buy companies that are extremely undervalued at prices in the future.
Yeah. Not only companies. So one of the things about me, so I'm a portfolio manager. So this is my job, actually. I mean, in real life, not only Toro, but it's my actual job. So I service a lot of different investment funds that invest in a lot of different assets. So I have one that invests in stocks, but I also have that invests in real estate, in private debt. So the point being is that I have no taboo at all when it comes to assets. So I can buy stocks, I can buy cryptos, I can buy treasuries, ETFs. I really have no taboo at all. I can buy commodities. It just depends where the risk ratio is the most attractive, right? So this is the most important to me. So if you tell me a Trump coin, I'm not going to say right away that, it's the worst investment. I'm going to see the risks that we have in this asset, Trump coin, and the potential reward that we have. And, depending on the risk reward, it could be interesting to have Trump coin in a portfolio together with PepsiCo that pays dividends and, is a blue chip company there since decades. So my portfolio could look weird sometimes because you have really assets that kind of make no sense of being together. But this is also how you achieve diversification, right? A lot of people diversify saying, I'm going to buy a stock, utility stock, and the consumer staple stock and the tech stock, but they all US stocks, they all move together. Even if you have European stocks, they all move with US stocks. So you're not really diversifying, and we're seeing it currently with the market crash. Absolutely everything
getting annihilated.
like right now you just want to buy absolutely everything. And this is where you see that diversification has weakness, because today almost everything is correlated. So I am not going to seek diversification for the sole purpose of it. I'm just not going to have any taboo. I can invest in weapons, so defense stocks. I can invest in cigarettes. I'm against, cigarettes. I don't drink. I don't like weapons. But this is me in my private life. But as an investor, everything is investable. So this is my main philosophy. Everything is investable.
No, I get you, because there's two things. An interesting influencer online calls it perspective versus perception, right? And it's how you see the world is not how the world behaves, right? So sometimes you got to make those distinctions, which I think is fantastic, like having a risk part of your portfolio that potentially you're looking for outsized gains, but nothing major that could bankrupt you,
Yeah.
not going all in one stock. That is key in investing too.
I'm married, so this is quite personal, everything that I'm sharing today, but I think it's important for you to understand me as an investor. I'm married, and my wife is very often pissed off at me. Why? Because she often sees a bag that is really expensive, a Louis Vuitton bag, and she wants it, and it costs thousands of euros. She calls me a cheapskate. I'm not a cheapskate because to send her on holiday, I don't mind to spend a couple thousands of euros, and then you have a beautiful experience and you meet people, and you have something new, and she loves traveling. But when it comes to buying a bag, I'm not going to buy her a bag that costs a few thousands of euros, no matter how much she asks. However, I do like to have the stock from time to time in my portfolio of Louis Vuitton. So when I see people spending thousands of euros for a bag that costs actually just like $100 to produce, then I am happy to see it. Right? And so this is some kind of inefficiency. I call it inefficiency that I like to take advantage of, right? And buying cigarette stocks, so cigarette company stocks, is also some kind of inefficiency that I'm buying and taking advantage of, because a lot of investors and a lot of investment funds, they restrict themselves. A lot of institutional investors restrict themselves from buying them. And they have massive amounts of cash, excellent margins. And this money is being redistributed in dividends and in share buybacks. So I'm absolutely happy to have shares of those companies, right? So I think it's really important to explore these social inefficiencies. And the best way is to trade on eToro as a social platform. You hear people what they're absolutely never buying. Actually, every time someone is saying, I'm never buying this one, I'm actually writing it down and keeping it in my watch list.
Yeah.
So you have to explore these inefficiencies.
But funny enough, I'm gonna bring something a little bit unrelated, and I'm gonna play the devil's advocate for your wife here. Sometimes some Louis Vuitton bags might actually raise in price. So you're not doing your due diligence here.
No,
maybe
true.
You don't buy her the generic one, but maybe you buy her the one that will go up in price. I did that for my brother. I bought him a Counter-Strike skin, and it was like a $50 skin. Right now, that skin is worth $100. So I was like, I disapprove, but at the same time, I did my research and I bought him an investment, even if he didn't want to,
No, so, you're absolutely right. But, this is collection. This is a bit like art.
For sure.
But it's investing. What you did was investing. You didn't buy it just for just to show off to.
Next time you have to tell me which Louis Vuitton bag or which Chanel coat I need to buy in order to make money. Yeah. Okay, so let's pivot a little bit. So market outlook. Markets are crashing. They're coming off a little bit of the highs. We bounced today. What do you see right now happening? And how are you moving your portfolio?
So, everything has been crashing. Some Some assets more than others. So all the risk assets, they have been falling like crazy. My shift now is I have sold my defensive plays. So in my portfolio right now, I think you're not going to see any single defensive stock. I have shifted to growth stocks because right now growth stocks, companies that have been growing by 20%, 30% in terms of revenue and in terms of earnings, and will continue to do so in the next years, are trading at the same valuation or almost the same valuation as no growth stocks. And there you have again an inefficiency because those companies, they have grown a lot in recent months, recent quarters, and that's why people have sold them. And now they're super, super attractive. Almost every Mag 7 stock is really attractive now. I would not include Apple and Tesla in the list of attractive stocks. I think Apple
So the Mag
is
5.
so Apple doesn't have much growth. It had some growth struggles already in terms of revenue, and it's still expensive. Tesla, I'm not even going to talk about Tesla's valuation. But the other Mag 5 stocks, they're really, really interesting, and there's a huge opportunity there. They are still growth stocks. Microsoft, I don't know if you want to call it growth stock, it still grows kind of 10% per year, yeah. But the rest, Amazon, 20% growth, Nvidia, more than 20% growth. Those are the stocks you need to look at. They have huge amount of cash. They're not going to go down anytime soon. Global economy depends on Amazon, on Nvidia chips, on Microsoft. I mean, look at all the companies that are using Outlook and Teams.
Yeah, of course.
And Excel, I mean, it's just the base of the entire global economy. And they're trading like a random US utility stock at the same valuation as one that, can be easily replaced by another company. Anyway, there lies the opportunity. So you need to always explore those inefficiencies. Yes, it requires to be contrarian. You actually have to make those uncomfortable decisions, because right now the comfortable decision is what? Is to keep the money in cash and wait till the market recovers.
Put it in a bond, get 1%, 4% a year.
This is the comfortable decision to make, but you're going to miss those 10 best days that provide what percentage? More than 50%?
More than 50 to 60% of your returns, yeah.
Of your returns.
The top 10 days, and then the top 20 days provide like 70 to 80.
Yeah, and you're going to miss them if you sell now and keep everything in cash and wait till the market recovers. No, you have to buy now. Buy companies that have a lot of cash and that the whole financial system depend on.
So, okay, now pivoting to this, what are the 3 companies right now that are on your watch list and you're looking to get more exposure of to this day, like starting today or starting, I guess Monday, Black Monday, I guess?
That's actually an excellent question. So I actually don't advocate for buying a stock and having until your retirement, because the truth is the top stocks, they actually tend to rotate. Just 30 years ago, maybe most people here maybe are too young to remember, but 30 years ago, the top stocks were IBM, Cisco, Intel, Coca-Cola, American Express. Now they all, I mean, some of them are still good, like Coca-Cola, but, they're not leading the market. Now is, Nvidia, Microsoft, Apple. And we feel like in 20 years, it's going to be those same names, but no, it's going to be completely different names. 20 years from now, we are not going to have Nvidia and Apple. And I know it's difficult to imagine, but the leaders rotate every now and then. So every 20-year cycle.
No, you can't be in love. Like, you cannot be in love with an individual stock because you don't know what you don't know.
Yeah, exactly.
The way that I like to look at it. It's definitely, maybe they are ahead today, but then Intel was ahead back in the day and now not anymore. Nvidia's ahead. AMD could come and all of a sudden break all expectations and then could be ahead. So you have to be willing if you're investing in these sectors, which makes total sense. Absolutely. I think an individual stocks is different from like ETF holding and all of these different ways of investing as well, which is like sometimes in a meme coin, you might get in and get out really quickly because you're not going to get 1,000% a day every day.
Yeah.
Right. So you have to understand what you're buying as well. So the question then goes down to this: where do you see value in the market today?
Yeah. So
you said tech. Inside tech, which one?
Yeah, I'm going to come to that. But something I wanted to add, because people would always give me this counter argument and be like, okay, then I'll just buy the S&P 500 and just stick with it until my retirement. The thing is, even the S&P 500 in its history went through periods of 20 years of flat performance.
That decades. Yeah.
It's something to keep in mind. We've been used since the global financial crisis, so since 2008, 2009, that the S&P on average is growing by 20% a year, or 15 or 20%. But this is abnormal. The average historical return is around 8 or 9%, I believe. And we had periods where it was at 0% for like a decade, 2 decades, where you had really lost decades. So this is something to keep in mind. However, if you're someone who, don't know how to analyze a company, of course, you buy an ETF, you buy the S&P 500, is the best you can do. If you're not going to, analyze companies, and if you don't trust popular investors or fund managers with your money, right? Popular investors on eToro are like fund managers. So me personally, I'm a stock picker, and I think every year is a stock picking market. And right now it's really a stock picking market because
Trump has made that. Yeah. It is a trader's market.
The 20% drop we had from recent highs in the S&P, we are still trading at the higher range of the PE ratio from a historical perspective. So there is room for the index to continue falling, but you have some stocks that are extremely attractive. So I named a few, Nvidia, Amazon, but I want to bring value. So I'm going to our listeners, so I'm going to name actually a few companies, 3 companies, from 3 different continents, just to bring...
Wow, you're separating from America. Okay, great.
Just to bring some value to our listeners, because it would be too easy if I recommend Nvidia, Amazon, and Microsoft.
And again, these are recommendations, so make sure you do your own due diligence and understand what you're investing. It's not my job to buy your stocks unless you're copying me. And I'm buying for myself and my portfolios and my risk tolerance. So
a little correction. They are not recommendations. They are opinions that may be voiced as recommendations or as facts.
Correct.
So please, as Nestor said, do your own research. I'm going to start with the most famous one from the 3 picks that I have. BYD, a Chinese company. This is a fantastic exposure to EVs. In my opinion, electric vehicles, it's the future. It's been beaten down, the sector, since now many quarters, but this is where we're heading to. And BYD, the execution capabilities of the management is just insane. You have to imagine BYD is producing millions of cars and is still able to keep control of everything and to ship everything efficiently, respect deadlines, continue to innovate. We're going to have cars that they can charge BYDs in 5 minutes. So it's even less than when you go to a gas station, get your hands dirty, put the gas in the car, go to pay, blah, blah. With this one, 5 minutes, bam, charged. And then you can continue driving. BYD is really innovating. And it's a fantastic way to have exposure to Asia. Asia is where most people live. It's also where most people will continue to live. There's a real demographic boom since decades and in the coming decades as well. Global GDP is not even slowly, is quickly going towards Asia. BYD will continue to sell in China. There's a huge middle class that is growing and that trusts less and less or likes less and less American cars.
Well, and with the current situation with the trade wars, even more, yeah, for sure.
Yeah, and they will export to South Asia, Southeast Asia. There's a huge boom there. And so BYD, for me, it's not a bet just on Chinese industrial capabilities, but also on the company itself. It has amazing margins for capital intensive companies. So BYD, I love it.
And let me just bring in one of the risks. Are you not scared of the China lie sort of thing? Because many investors say, okay, I cannot trust the Chinese numbers because they're not as regulated as American companies. What are your thoughts on that? Do you think any major risks arise from that?
So I don't see a major risk for BYD because simply we see BYD everywhere around us more and more. And I think they are really expanding quickly. So of course, I never advocate to put all your money in one stock. So there's always the unknowns, right? So you can never be 100% sure when a company frauds, because usually when a company frauds, you just know it after they fraud, not before they frauded,
It's the
by
truth.
definition, right?
Yeah.
So there's always that risk. You need to be alert. But based on some indicators that I also have on some softwares, usually when there is fraud, and this is quite interesting, but I don't know if we have really the time to go into it, but in the accounting, there will be no even numbers or less even numbers than usual, the even ones, right? Because the companies that are frauding, they're trying to
hide it.
to make
You're
up
trying
numbers
to, yeah,
that
you're
are not
cooking the book.
even.
So there's
Yeah?
no randomness. Okay. All right. What's your second stock?
My second stock, so I will pick a European one this time, because I think it's important to have exposure to US, Europe, and Asia. There's a European stock I like, and it's an AI stock. You know, we
European
talk a lot.
AI. My goodness, we're touching all the bases here. I love this.
You know, we had American AI and we still have them, and there's a huge amount of competition. But now with the geopolitical tensions, Trump is president for another at least 3 years and 3/4. I mean, almost 4 years president at the very minimum. And Europe will want to push its AI transformation by relying less on American AI. We already know the Chinese AI are not so reliable, because the Chinese AI companies, we don't actually know how many chips they need, their capabilities. And the American AI companies, they're also not reliable because of Trump, and their stocks are actually quite expensive. Now they've gotten cheaper, but they're very expensive. This European company is called Nebius.
What's the ticker?
Nebius. NBIS. It's listed on the NASDAQ.
Okay.
It's not very well known, but I actually bought it at the end of last year, and it turned out, to my surprise actually, that one of the institutional investors that bought a good portion of Nebius shares at the beginning of this year is Nvidia. So it's quite interesting.
So they're partnering.
They're partnering, and Nvidia is the way for Nvidia to have a foot in Europe. But nonetheless, it's not the main shareholder. Nebius is a European company. It's developing data centers. It has a data center in Finland, and it's developing cloud solutions, and it's growing like crazy. When you look at the revenue, it's not generating yet positive earnings, but I believe they will have positive earnings per share by next year. But they're growing like crazy in terms of revenue, and it's not a well-known company. And I think when you're an investor, for the long term, that's where you need to look at growth stocks that are not known yet. Okay, I think you need to have some exposure to it. It's quite high risk, but you need to know the company, to read about it, and to understand it. And my last pick, my third and last pick, is a US company. I think you need to have exposure to the US. You need to have exposure to US energy. And you know what energy has the best potential in the US in the next decades, Nestor?
Are you gonna tell me it's gonna be nuclear? Are we going nuclear?
I'm not going nuclear.
Oh, wow.
Because nuclear...
Is this the one I got? Then you're going what? Solar? First solar?
Solar, absolutely.
First solar? FSLR?
So nuclear is expensive. The nuclear stocks, they got very expensive. But solar, the south of the United States, is extremely sunny and has so many lands available to install solar panels. And there's a real boom there for solar energy. First solar is growing like crazy, both on top and bottom line.
I'm surprised at the downturn that they have had. I mean, like, they were definitely overvalued, and there was a lot of scares, but with the energy emergency coming from Trump.
Yeah. So they dropped like crazy since Trump's election. So I bought after Trump got elected because I found it an irrational move. There are fears that Trump is going to fight solar energy, but he's not going to fight solar energy.
I think he doesn't like his wind. I think he hates wind, you know?
Solar energy boomed like crazy during his first mandate. And let me just give you a number. The last 5 year average of for solar PE, last 5 years, so this includes the current cheap valuation, last 5 years, it was above 21. Trailing and forward price to earnings on average were around 21. Right now, the stock is trading at 10 trailing earnings and 7 forward earnings. 7.
I know. I know,
So
and the
in
China
7
tariffs
years,
also help.
so 7 years of earnings is sufficient to buy the whole company again. And it continues growing. It continues growing like crazy. So this 7 times earnings is expected. I have here the numbers. By next year, forward earnings are going to be four. You don't find this kind of valuations anymore. The company has been growing by more than 20%, and on a forward basis, the next 3 to 5 years is supposed to increase. The earnings are supposed to increase by at least 30% every year. So this is the cheapest possible growth stock that you can find.
Yeah, and the fact that the tariffs help them
And the
sell more in
tariffs,
America.
I forgot to mention the tariffs.
Yeah.
I'm sorry, this is one of the arguments actually. The tariffs protects First Solar from cheaper Chinese competitors. There's always that risk for US solar companies is that you have Chinese companies coming in.
Undercutting.
Biden was actually tariffing the Chinese companies, so those solar companies were protected during Biden. And this is also
he hasn't appealed that mandate. Eh?
Yeah. And this is also, it's not very well known, but Biden, he liked tariffs as well, And
correct.
We don't hear it. We didn't hear it at all in the news. And the fact is that Trump, he's not going to have lower tariffs than Biden. He's going to have higher tariffs than Biden. So he's going to protect even more solar companies. And it's a fantastic play for the tariffs to buy US solar stocks, because it's this sector that will grow with the tariffs. And you know how irrational the market is. The stock dropped also.
Nobody likes solar anymore. It's done. Like nobody wants to farm the sun anymore, even though it's just there, free energy.
It's there. It's free energy.
Yeah.
I mentioned exploring market inefficiencies. You have companies like Alphabet, Google, that dropped because of tariffs. How does this make any sense?
Yeah. And then Apple increased. Apple increased with 50% tariffs.
Are we going to tariff your Google search results?
Yeah. It's insane. The market, it's been the irrationality in the markets that allows for those opportunities and for that value to come in. That is the beauty of the market, and when sometimes and the thing is you have to go through this once, twice, 3 times. So whenever I lose money in the markets, it's just tuition cost. You know what I mean? Because it was I didn't know that. Now I know that sometimes the market comes down because somebody in China decided to wake up on the wrong side of the bed. You know what I mean? And it's well, that doesn't affect my company. That's why you have to understand why you're buying. You have to understand the reason you're holding a company. What's the story behind it? And the fundamentals too. Understanding how much money are they making? Can they stop making more? Are they going to increase the amount of money they're making? Everything allows for this picture to be drawn. And we have to follow the advice of Warren Buffett. At the short term, the stock market is a voting machine. In the long term, it's a value machine, right? So in this case, what is the difference? It's everybody thinks the stock market is down, we're over, everything is over, when the reality is that, no, some companies are going to get hurt, some companies are going to win. I'm going to figure out which ones those are and put my money in the companies that I think are going to benefit the most. This is the beauty. It's the beauty.
Bravo.
Akim. Bravo. Okay, I want to say thank you so much. Make sure you check out Akim's portfolio and my portfolio in the links below, because I'm going to throw it out there.
Thank you for doing this, Nestor.
No. This is fantastic. We'll make sure to get it out for everybody as soon as possible. And don't forget to hit that like and subscribe if you like the content. And make sure you copy us or follow us at least. All right. Thanks so much for watching, everybody.
Thank you.
Peace out.